The solar industry is poised for an epic growth trajectory, extending to 2030 and beyond. This decade of boom comes as the Inflation Reduction Act accelerates decarbonization momentum in the United States and abroad. This one piece of legislation holds the potential to drastically alter the short, medium, and long-term prospects for solar energy in the United States. It is perhaps the most significant legislation for the solar industry ever enacted, with billions of dollars in investment tax credits allocated to accelerate the deployment of solar energy. Other industrialized countries, especially within Europe, will very certainly follow suit with their own versions of the act in the coming years. This trend is expected to continue, with the Biden administration aiming to further bring down the levelized costs of solar energy. According to the Boston Consulting Group, the Inflation Reduction Act may raise the deployment of zero-carbon energy to up to 80% of power output by 2030, with US solar and wind potentially becoming the cheapest in the world, at less than $5 per megawatt-hour by 2029. These are certainly optimistic, but they demonstrate how much growth is predicted over the next decade. In light of this booming opportunity, we bring to you a video highlighting the 5 best solar stocks for the next 5 years. The first stock we present on our list is Maxeon Solar Technologies, the Singapore-based solar company, which trades by the ticker MAXN. The company came into being following a spin-off from Sun Power Corporation, together with whom it worked to establish a strong foothold in the US market. However, Maxeon is faced with a tremendous window of opportunity, as 2023 emerges, given the ending of its exclusive distribution contract with SunPower. As a result, Maxeon now stands able to directly cater to end customers, and vastly expand its sales and distribution potential. From a long-term standpoint, this will enable the company to better add value to its products, which it stands as being highly capable of executing. In fact, Maxeon, despite operating in a negative EPS phase of its business cycle, has been showing drastic improvements in performance. In third quarter, it improved its net income by 25% on a year-on-year basis, and is all set to deliver positive earnings by 2023. A primary reason for this booming performance has been its effort on diversifying its solar solution product line, which has been a booming success in the various markets that Maxeon operates within. With these new capabilities, Maxeon has seen remarkable growth in the Europe, Middle East and African markets. A further point of future growth potential is the company's strategy, focusing on a sustained gigawatt capacity expansion in the following years. It already has finalized plans to capitalize on the opportunities presented by the Inflation Reduction Act, and set up a 3-gigawatt solar factory within the United States. Although this may take several years to be fully established, it would be a game changer for the future prospects of Maxeon Solar. The stock is on the verge of a massive growth trajectory, and now is the time to invest in this promising solar player. The second solar stock we present is the small, but highly promising solar growth star, ReneSola Ltd, trading by the ticker SOL. ReneSola is a prime investment candidate to consider, given its ability to shift gear towards opportunity, in a manner that is distinct to almost every player in the solar game. Its track record points to its ability to successfully pivot and enhance shareholder value through smooth execution. The company started off with a focus on the Chinese solar panel market over 10 years ago, and has since been moving to more profitable domains in the solar value chain. It captured significant market share after its transition to a solar farm builder, within which it followed the develop, build, and sell philosophy. It now plans to own these farms as independent power producers, allowing for stable earnings and sustainable growth over the long term. This shift has been largely successful, considering the 86% revenue growth it drove in the most recent quarter. Similarly, ReneSola's venture into engineering and construction of solar farms has further been a highly successful growth catalyst, through which it has increased its 2023 revenue guidance to depict almost 70% growth. In addition to ReneSola's business pivot, another aspect that stands as highly promising is its aggressive European expansion. Its purchase of solar farms in the UK and Italy, as well as the construction of various solar projects in Poland and Hungary, holds significant potential, especially after factoring in the energy security crisis in the region, following Russia's invasion of Ukraine. ReneSola has several indicators that suggest it may be a future winner, and has been playing all its cards in a strategically sound manner. The stock stands as being one of the best in the solar game, that is worth betting on. Before we move on to the next stock, we'd like you to know that we offer a morning newsletter to our email subscribers. Prior to the market opening, we send our subscribers an informative email about which stocks are moving, or about to move. You will get an overview of key earnings reports, recent insider transactions, analyst upgrades, and downgrades. To take advantage of this offer, you can find the link in the description box. If you're still with us, it means you've liked our video. Do click on the like button to show your support. Next up we take a look at Canadian Solar Incorporated, which goes by the trade ticker, CSIQ. Canadian Solar has quite a lot going for it, which includes the strongest secular tailwinds seen in decades, a history of consistent profitability, and plans of dramatic expansion, which will fully take the company to the next level. With Canadian Solar focusing primarily on large-scale solar energy production and storage plants, it has established itself over the years as a highly bankable company. As a result, it is less sensitive to cyclical downturns, in comparison to most solar players. Furthermore, its business model stands as being extremely sustainable, with its core earnings derived from project sales, while simultaneously securing recurring streams of revenue, by maintaining minority stakes in these projects. Its operations and maintenance segment has also been growing drastically, with its innovative offerings that include drone inspection, machine learning maintenance, module washing, and so on. Its recent quarter brought in 57% and 116% top and bottom line growth respectively, demonstrating the company's ability to thrive in a favorable market environment. More recently, the management has been focusing on a massive expansion project to establish its own polysilicon plant in the Chinese province of Qinghai. The company will spend over $1 billion towards this initiative next year, which would be essential in it gaining control over its cost and supply chain, by which it would cut out third-party suppliers. Although the move would restrict free cash flow in the short term, Canadian Solar is likely to emerge as a solar energy titan after the setup. Presently, CSIQ is down from its $47 high to almost $30, despite excellent third-quarter results. This marks a brilliant entry point for investors to get a hold of the stock, before its takeoff in the coming years. Coming up next on our list of top solar stocks, is Pineapple Energy Incorporated, the young but highly promising company that trades by the ticker, PEGY. With a market capitalization of barely $15 million, and only a few months of running a corporate setup, Pineapple Energy has a long way to prove its mettle. Despite its small size and recent beginning, however, PEGY has been seeing rocketing top-line growth, coinciding with rapid growth in its total addressable market. Thanks to a number of tailwinds supporting booming solar growth in the United States, as well as catalysts like the Inflation Reduction Act, small players such as Pineapple Energy Incorporated are benefiting tremendously from the present environment. In particular, PEGY has been boasting an impeccable track record in its very first year of operations. It reeled in a total quarterly revenue of $318,000 in the first quarter, which had surged to a whopping $5.9 million, and $7.7 million for the second and third quarters. Since going public, Pineapple Energy has been pushing through with its momentum, and aims to expand its product pipeline towards EV chargers, commercial plants and heat pumps. It reports cash and equivalents worth $14 million, which management claims gives it sufficient runway towards executing these ambitions. The company is still in a very early stage, yet has been flying phenomenally, making it a great opportunity for the early bird investor. The stock has all the hallmarks of a screaming buy. The final stock on our list, and far from being the least, is the Chinese low-cost photovoltaic product manufacturer, JinkoSolar Holding, which trades by the ticker, JKS. JinkoSolar is on a mission to capture global market share, leaving all competition behind, and it is doing so through its razor-thin profit margins, through which it has been growing at an explosive pace. Its trailing 12-month revenue growth rate is presently at a whopping 149%, whereas its 3-year compound annual growth rate stands at an impressive 35.3%. What is most appealing about these numbers is that this growth is purely organic, with no recent acquisitions to inflate the numbers. There is no other player in the solar realm demonstrating growth to such a substantial level. However, in order to execute on this hyper-growth trajectory, JKS has lowered the priority on profitability, with a gross profit margin below 15%, and net income margin lower than 2%. As a result, JKS has become a globally renowned brand, spanning 160 countries, with spectacular market performance in the developing world. The company aims to conquer the global solar market with its low-margin strategy, and then improve higher-margin offerings to its customer base. Its energy storage systems, which are highly capable of powering data centers, military facilities, and corporate environments, are also being positioned for a launch into the North American markets. The company will then eventually pivot into offering high-margin products such as hybrid inverters, solar charge controllers, and EV charging tools. JinkoSolar is following a slow yet highly ambitious strategy, but is on its way toward making a mark in this highly competitive global space. JKS is the stock for those who are patient enough to ride its epic growth wave. That's all from us in this video. We hope the insight we aimed to deliver has proven valuable to you, and would allow you to ensure your portfolio is well exposed to the dynamic solar opportunity. We would love to hear your feedback about our list in the comments below. To gain a deeper insight into different stocks that are fit for various investment strategies, be sure to check out our website, stockstelegraph.com.